Whatever stage you're at with your trading, it's important to stop and gain perspective before planning your next move. Take a break from the charts and join in the discussion with our hosts, Jason Graystone and Akil Stokes, as they share insights, opinions and expertise on all things trading. Grab a coffee, pull up a chair and join the Trader Coffee Break.
Well, welcome back to another Trader Coffee Break. Hope you guys are doing well. If you're here in the chat, let us know. Just fire away. There's some crazy things going on in the market right now. So
sorry about that. Managing some positions now.
Akil's literally trading through this. Let us know in the chat if you guys have got any positions on during what's going on. We've got a lot of news. It's a big news week this week, and that's kind of what we want to talk about in this session. Now, I know we've alluded to the fact before that we don't, as technical traders, we don't pay too much attention to fundamentals in terms of they allow us to make trading decisions, but we do, we can use them to our advantage if we're in positions, and we can also use them to stay out of trades. And there's certain things that I think are very relevant right now in terms of what's going on and how some of the questions you might have in your head, and is it related to trading? Does it affect your trading and all the rest of it? So we're going to just have a bit of a discussion on that. If you guys have got any kind of views or opinions that you want to share with us in the chat, you can as well. How's your week been so far, Akil?
It's been good. It's been a good week. End of January already, which is crazy, but I'll tell you, I'm super excited about, especially coming off the meeting we had yesterday. We had a random meeting, which ended up turning into one of the most productive meetings we had. And we can't spill the beans on a lot of stuff, but very excited about the ideas and starting to follow through on that.
Yeah.
But going off of what you said about fundamental analysis, I love the, and I believe you say this in the course, you call it hybrid trading. And I've been stealing that term from you. I love it because I don't know about you, but at the beginning of my trading career, I was, we were taught there were basically two sides of it, right? It's red and blue, right? Liverpool and Everton. It's either your fundamental or your technical, right? You have to be one or the other. And the fundamentalists dug in and say that fundamentals are the only way you can trade. The technicals would dig in and say technicals are the only way you can be profitable. And I know I got sucked into that junk because, you don't know any better, unconscious incompetence. And as you evolve as a trader, like you said, you start to see that the market it's really a blend of the two, right? The market is nothing more than a representation of all of the participants and the actions that we take. And if there's a certain group that is fundamentally driven and there's a certain group that's technically driven, it makes perfect sense to understand that the markets are driven by both. And why can't you implement that in your trading? And I think that is key. And I think one can help the other. I do think you need to have kind of I want to call it a moral code, but you have to have. So I am in trading, not investing. I'm technically driven. So anything I do, there has to be a technical reason. So that's going to be first and foremost. I can't just make a decision off of fundamental reason. But if we have a technical setup and the fundamental reason is in line with it, you can set yourself up for some really explosive and trading opportunities. We like to call them home run trades. And I think for someone that's an experienced trader, if you can catch one or two of those a year, that's all you need to do massive damage in a positive way to your equity curve and your return on investment.
Yeah, they're like the account boosters, right?
Yeah.
And they come without trying. You don't chase those kind of trades. I think that's the difference. People who try and chase those types of trades are the ones that end up not doing so well. Whereas if you're just consistent and you've got a kind of slow, boring equity curve, and then you can catch those moves, that's where you end up in a real good position at the end of each year. And that's kind of how you can use it. So what I was going to talk about just kind of briefly is everyone's talking about the market crashing, crypto crashing. I think we saw the Dow Jones was down like 4.6%. S&P 500.
Fear, run for the hills, right?
Yeah, right. And this is what's happening, right? This is what's happening. Like the S&P down 5.7%. Bitcoin down 20%, Ethereum down 25%, Netflix and companies like that literally crash like 40% down. I think they were down like 23% last week. And what I want to talk about really is kind of everything's factored into the market's anyway. So like by the time you realize or try and catch a move that you think is going to happen, or you think there's going to be a crash, it's never usually at the time that you think it's going to happen. It's normally priced in, and we talk about this all the time in our live trading rooms. But if you are a smart investor, let's talk about investing for a moment. If you're a smart investor, you look at the story, because all the markets, the best investors, all they do is project and forecast based on a story of what's happening. It's basically common sense and historical activity. So, for instance, Netflix, the reason that they dropped 40% was because they underestimated their users on their earnings by 50%. So they thought they were going to have 50% more users than they have, or 100% more users than they have. So that says people are spending less money on Netflix. That's all it says. Like, that is literally all it says. Same with Google searches. If you do trends on Google searches like home loans and car loans, you'll see that they're at a 5-year low. Okay, YouTube ad revenue is down 28% across the board. All this means is companies are spending less money on advertising. Companies are withdrawing money from stocks, from crypto. People are keeping their money safe while they're unsure, which means there's less spending going on. And that's really all it means. Now, the reason today's important is because it's about interest rates. And depending on the earnings, if there's good earnings, they may increase the interest rates quicker. Or if it's low earnings, they may hold off increasing interest rates. They've got to increase them because we've got to increase them. They won't do it drastically because that will just cause a massive snowball. That will cause a recession, and then that's not what anyone wants. But they will increase them. It's just how quickly and how certain they are on the announcement, and that's kind of where we'll see the end of this crash. But I don't think you need to worry about it right now. It's just, it is what it is. And if you're a trader trying to take advantage of these moves, you're probably going to struggle anyway because you don't have a consistent plan. You're just trying to jump in hype-driven moves, which is not really what trading's about. I don't know if you've come across anyone who's attempted to take those types of trades, Akil. Like, have you had conversations with people who are trying to, what's going to happen with this? What's going to happen with that?
All the time. I did an interview I did the interview circuit over the winter break where we take a little bit of downtime. And I remember doing an interview with someone about crypto. And I told him, first and foremost, I said, I'm not a crypto expert. I'm a trader. I can tell you the technical analysis behind it. I have my own personal views on crypto. But like, as far as like, he's asking me questions like, in 2 years, what do you think this is going to be in that? I'm like, I don't know what the Fed's going to do at this point. Like, I don't like it. It's like people are looking for excuses, looking for confirmation bias to do what they already want to do instead of being smart about it. So yeah, we have people asking all the time, hey, what do you think the Fed's going to do today? Should I buy in advance? Should I do this? And they're trying to look for the shortcut. And I did this as a younger trader. I remember I got lucky on a non-farm payroll release, right? Non-farm payroll. It's not as drastic as it is today, but it was much more drastic back then in 2009 than it is today. And I got lucky. I just happened to be in a trade. I didn't even know about the non-farms. I just happened to be in a trade for some random gambling reason. And the market boomed like 200 pips in my favor in like 2 minutes. And I went back and researched. I found out it was this non-farm thing. And I said, Akil, you know what? Man, I'm all about time freedom. I'm going to sit back and trade once a month, Jason. Once a month. Yeah. I'm going to travel the world. I'm going to do whatever I want. I'll do a little bit of study so I can predict, and by study, I meant go to Forex Factory and look what their prediction says. And I'm going to trade this thing once a month. I'm going to make my 200 pips and I'm going to go do whatever for the rest of the month. And I thought it was that simple. And you know what happened the next time I tried to enter a non-farm payroll? I got burnt. Bad. I got burnt really bad and learned my lesson. So yeah, I do think there are people out there that try to look for a shortcut. I think there are people out there that fall into the panic. And I love what you said earlier about, you have to understand that everything is marked into the market well in advance, right? I was always told by my first investing mentor that by the time you hear about it on news, it's too late, right? It's already been priced in. So what we're looking for, what the market is looking for is the future, right? We already know that there's going to be interest rate hikes, like you said. That is a given. It's looking for, okay, or is it still going to be in March? Is it going to be more aggressive, more conservative? Those are the clues. The what's next is what the real investors are worried about, so or concerned about. So when you see like drastic dips like we did the other day, right? The first thing I did was I added to my S&P portfolio.
Yeah.
That is the first thing I did. I said, you know what? Dip, I'm going to get it for cheap. Things are going to get better. Add it to that portfolio and not anticipation of what's going to happen the next day, what's going to happen today, but what's going to happen weeks and months and years down the road. And I think that's the approach that we need to take. We need to calm down.
Definitely. And it's when you're saying it's been priced into the market and it's about projections. Look, I do a lot of studies on previous history of price and what happens in other recessions and what's happened during other interest rate hikes.
It's amazing.
And things like that. Yeah. Right. Now, look, I know for a fact that over the last we've been in this position before, right? Over the last 5 times from 1989 to 2021, when they have not hiked the interest rate, they've kept it the same. The S&P 500, the average performance of the S&P 500 across those 5 years was 23%, right? That's pretty good. Now, I compared that to the last 6 times from 1999 to 2019 when they did hike the interest rate, and the performance of the S&P 500 was 63%. Now, we've seen situations where they've literally devalued the dollar, and the dollar in the markets has gone up because of the market participants' reaction. We've seen that many times, Akil, right?
Yeah. Yes.
So when you're trying to predict how people are going to react to a figure, because that's so subjective, you're going to really have a hard time consistently guessing what's going to happen. And just understand that whatever's going to happen's already priced in by the time you know about it. Akil just mentioned then, when we crashed in 2020, March, I think the news announced a recession in April when we hit 20% decline of the previous high, but we'd actually been declining since December or January. So that was the high. So we'd actually, by the time we got to April, we were in a recession, but we've been crashing since December. So my advice to anyone looking to invest in this is carry on your long-term investment strategy. But if you're trying to trade it, man, it's okay having an allocation set aside for gambling, but just understand that's all it is. Like, you're going to catch a gamble, and that's great. If you love gambling, you love going casino, that's fine. But in terms of having like a consistent long-term trading strategy, you're far better off just sticking to your plan, and then if the fundamentals play out in favor of your technical analysis or the rules that entered you into the trade, then have a rule where you can actually just manage the trade and watch it and try and squeeze as much profit out as possible. I think that's fair. Akil, what did you say?
Yeah, let me tell you about a funny story that actually happened this morning. So Bank of Canada just released their interest rate decision. And
just as we got on this call, right?
Just as we got in, like literally right when we started. And I was sold, if you listened to me this morning and you popped in for a little bit, I was sold that there was going to be a surprise interest rate hike because Canada tends to kind of not fluff around. They kind of do what they want. I thought they were going to be the one that was going to get the ball rolling. So we were talking all this morning about, hey, if you're looking for that home run trade, for a trade where the technicals line up with the fundamentals, let's look for Canadian strength. Now, the ironic thing was this, right? Per my trading plan, I had a long position on dollar Canada, which means I was bearish the Canadian dollar, bullish the US dollar. So I was going in the opposite direction. And we had a great speech or a great kind of talk about, hey, like, well, Akil, isn't it kind of crazy if you're predicting that this or expecting or anticipating this fundamental news event to come out one way, but you're on a different side of the market? Isn't that crazy? And I told our trader, I said, I would love to be short Canada, right? It is with my fundamental bias, but there is a technical reason on the chart that I need to be long. It is part of my trading plan. I cannot deviate from my trading plan. I know that technicals trump fundamentals in my trading plan, so I have to be in it. I don't have to like it. I don't have to feel good about it, but we're playing probabilities. We're playing the long-term numbers game here. And as soon as we got on this call, right, announcement came out, oh, Canada's keeping rates steady, no increase. And what happens with that trade I had on? Boom, spikes up for profit. Raymond just got on the chat. He was in it with me. He's doing backflips over there. Just made money, right? And it's because we stuck to a plan. We didn't make decisions based off what I thought, what I felt. Because if I did, I would have been opposite direction. I would have sold Canada for no good reason other than a guess at what might happen. But we stuck to the plan and we profited because of that. And you need to do the same thing, whether you're trading, whether you're investing, right? Have a plan. If you're putting money to the side to buy when, the index you favor or the stock you favor dips a certain percentage, have that to a side. Once it dips a certain percent, put it in. Don't wait. Don't hesitate. Don't get cute. Just stick to that consistent plan. And you got to think big picture. And I think going on the conversation we had yesterday, too many people don't think big picture. It's the instant gratification. I have to make it now. I've got to brag about it on social media now. I got to show my friends right now. And there's no long-term stability in that.
There's really not.
You may have some short-term gratification, but the next day you're going to be in the opposite position and blow everything. And we've heard those stories times and times again, who traders have been like, I got off to a good month and I blew it all yesterday. And like, how is that possible? But unfortunately, it's the reality out there.
It really is. Yeah. Yeah. So I remember a few years back when you had a similar situation on the dollar CAD, actually. And I
that's
think
my favorite.
Yeah. I'm not sure what announcement. I think that was interest rates, but it was, or it was Yellen or something. But you rode it out. I think you got like 300 odd pips from that move. I remember it well. So, kind of finishing thoughts is, as a trader, you want to take off your investor hat and you want to look at as many opportunities as possible to get in and out and make money as quickly as possible, but not, I don't mean like get rich quick. I mean, you want to make as much money as quickly as possible by getting as many opportunities as you can, but you don't concern yourself with what all hype is going on around you, or what someone's saying down the bar, or someone's saying down the shop, or Dave at work, or whatever. You have a plan, a consistent plan that you have proven to yourself yields results over a long period of time. Your job is then to just go and trade that 100% flawlessly. And if you're not trading that flawlessly, focus on that first before even introducing any fundamental influence or anything like that. Just trade the system, because doing that's hard enough, trust me, without all the craziness going on outside. So if you guys have got any input to add to this, or let us know how you use fundamental analysis. I know we've spoke about this a little bit before, but let us know how you attack it. Or do you stay out? Or, how does it influence your trading? And we'd love to hear some of your comments. Anything else, Akil?
No, I guess just real quick. I think staying out is if you're in doubt, stay out. So if you're someone we get a lot of traders that are worried, concerned about fundamentals. And I think when you start off as a trader and you're looking at a kind of an economic calendar, you're afraid of every like red or yellow high impact news event. And then as you spend more time, you start to see kind of which ones matter. So we can look through an economic calendar and be like, yeah, it's labeled red, but don't worry about that. Or, hey, that one's yellow, but watch out for this one. And that comes with time and experience. But I think if you ever have a doubt or a fear, you're worried, especially like with an FOMC, something of a high magnitude, the best thing you do is stay out. There's no need to, keep your powder dry. You're at zero risk when you're not in the market. And, some others will say that, hey, well, you have zero chance of making reward. But then that goes back to the mindset. Like, your main job is not to go broke, right? Yeah. You need to be, risk management is the number one key of trading. So I would always say err on the side of like, hey, if you're emotional, if you're undecided, if you're afraid, just stay out until you're in a better state, until the smoke clears, and then proceed to go back to what you're normally doing.
If in doubt, stay out. And that's a great note to finish this discussion on. Timon just says, no trading on NFP Friday for me. I think that's a wise choice, man. And it really just wraps up the kind of message of this show. The reason we meet for a coffee is to get away from the charts, do a little bit less, reset the mind. Doing less is more sometimes. If in doubt, stay out. And yeah, we'd love to hear what you guys think about this particular episode. If you've got any other topics you want us to discuss, fire them into the chat. And until next week, take care, have a great rest of your day, and we'll see you then.
Thanks for joining us for the Trader Coffee Break. Be sure to like this video, subscribe to the channel if you haven't already, and don't forget to hit the notification bell to never miss a live discussion. Follow our hosts on social media. And remember, do nothing to gain perspective on everything. See you next week.